Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Thursday, April 30th, 2026, and the vibe was mixed, but not messy. Big tech basically tore itself in half. Alphabet ripped higher, while Microsoft and Meta got hit. Here's the twist: that drama made the index headlines look way flatter than the actual tape. Under the surface, money was moving out of crowded megacap AI exposure and into parts of the market with more straightforward cash flow and clearer near-term visibility. So this wasn't pure risk on or risk off. It was selective risk. And it was all about AI spend, who can prove it pays off right now. Now look at the S&P 500 heat map, and you can see why the headlines lied a little. A lot of the board was green, participation looked solid, but there were a few deep red, index-heavy blocks sitting right in the middle of the screen. That concentrated weakness, especially in select megacap tech and communication services, did a lot of the masking. The bright spots popped. Industrials and healthcare showed up like magnets. Financials looked constructive overall. Meanwhile, some weakness clustered around high-beta AI leaders and parts of credit services. That heat map sets up the flow story. Capital rotated away from the most crowded high-duration AI compounders, where traders are hypersensitive to the timing between Capex and monetization, and into sectors with clearer near-term cash flow visibility. Industrials, healthcare, and financials-led staples and utilities added some defensive ballast in the background. The laggards were more specific. Select megacap tech and communication services, plus pockets of credit services. And the key read? Today didn't say, AI is over, it said, prove it. The tape rewarded clarity and punished spending optics. So stitch it together and you get the real context. This was a credibility day, not an index trend day. The central tension was AI spend credibility versus AI spend fatigue. Alphabet's print earned a re-rating. But Microsoft and Meta showed the other side. Even with strong results, the market can punish you if the Capex story sounds like, trust us, profits later, or if cloud and guidance Nuance disappoints. And that's why the session didn't resolve the big question. How much AI Capex is too much? But it did force a near-term repricing of who looks ready to monetize, versus who's still deep in build-out mode. On the chatter front, nothing here is confirmed, but it did color how traders talked about the tape. First, there was a lot of desk-level talk about positioning pressure in the crowded AI leadership, especially with those big, fast post-earnings moves. Second, the hyperscaler Capex debate stayed front and center in how people framed semis and infrastructure. And third, the custom silicon and in-house alternatives narrative popped back up in the background of the Nvidia conversation. Again, that's chatter, not fact. But it helps explain why the market was so quick to separate AI winners from AI spenders. Alphabet, GOOGL, was the clear standout. Shares were up about 10% on an earnings-driven upside repricing, tied to stronger-than-expected results in an upbeat AI and cloud narrative. And in a session where other megacap names were dragging, Alphabet mattered twice. It helped stabilize the broader tech mood, and it reshaped the Mag 7 leadership map for the day. This is what the market paid for today: message clarity and monetization confidence. Microsoft MSFT went the other direction, down about 4% after earnings. The reaction, based on today's read, centered on cloud and growth Nuance and that ongoing AI infrastructure spending debate. Why it mattered: Microsoft is a bellwether for enterprise AI monetization. Selling pressure here didn't just hit one stock, it weighed on the broader software and AI complex, sentiment-wise. Today's message was simple: the market is grading the margin, not the headline. Meta, META, was one of the sharpest down moves, off about 9%. The key detail from today's notes: the stock got punished despite strong results, because higher Capex guidance and the spend trajectory dominated the reaction. And it mattered beyond Meta. This hit communication services sentiment broadly, and it reinforced the tape's standard for AI right now. Ad strength isn't enough if the spend story looks like it's accelerating faster than proof of near-term ROI. Nvidia, NVDA, fell about 5%. The day's framing tied the move to hyperscaler Capex headlines, renewed debate around custom silicon and in-house alternatives, and some positioning sensitivity. Why it mattered: Nvidia trades like AI beta for the whole market. Seeing it red while a lot of the board was green reinforced the de-risk the crowded leader vibe. It didn't say, AI is dead. It said, crowding matters. Caterpillar CAT was a different kind of AI story, and the market liked it. The analysis flagged an earnings-driven surge with a narrative lift from data center and power build-out demand. CAT mattered because it acted like a picks and shovels beneficiary, proof that AI spend flows into the physical economy too, not just platforms and chips. And on a day like today, that's exactly why the Dow held up better. Old economy winners got rewarded. Qualcomm QCOM ripped up about 15%. The driver was clear: fiscal second quarter results and guidance, plus an AI chip narrative that pulled buyers in. Why it mattered today: QCOM up while Nvidia was down highlighted the semiconductor split. Traders weren't exiting the AI theme, they were rotating inside it. That's dispersion. And that was the whole session. Looking ahead, the near-term setup is mostly about digestion and positioning after today's megacap dispersion. For Friday, May 1st, the focus is simple. Does Alphabet hold leadership, and do Microsoft, Meta, and Nvidia find any stabilization? The open-to-close behavior matters after a day like this. Then next week brings a packed macro slate. On Tuesday, ISM services and jolts. Wednesday, ADP. Thursday, unemployment claims. Friday, the full jobs report, plus University of Michigan sentiment and inflation expectations, and Fed Governor Waller speaking Friday evening. No predictions, just a reminder. This tape has been punishing ambiguity, especially around spending and guidance. Bottom line today was selective, not simplistic. The index headline could have made this look like a shrug. But the Heatmap said otherwise. Breadth was better than it looked, and leadership just fractured at the top. The market didn't dump AI. It started policing it, hard, based on Capex optics and monetization proof. Into the next session, keep it clean. Watch whether leadership holds, and whether the biggest losers stop bleeding. That'll tell you if this was rotation, or something that wants a second day. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.